So as we close out of 2025, one question on everyone's mind is what's next for the Charleston real estate market? Are home prices finally going to level off? Are interest rates going to come back down? Is there going to be a substantial market crash to help with affordability? These are all clickbait questions, so let me insert some sanity into the conversation. I've done the research to give you the clearest picture of what to expect, so let's dive right in. Now, if you've been following the market in 2025, you know that it's been full of contradictions. Inventory has steadily been growing and interest rates have remained higher for longer than most of us thought, yet homes are still selling. In October of 2025, there were over 1,600 pending sales throughout the Charleston Metro, which is nearly a 19% increase year over year. So there are more buyers in the market today than there were just a year ago, which points how resilient the Charleston real estate market has become. But I like to describe Charleston as a tale of two markets. There is the northern market, which encompasses Summerville and Moncks Corner, and there's the southern market, which is pretty much just everything south of Summerville and Moncks Corner. The southern market has remained far more resilient than the northern market, and there's a few reasons for this, which we'll get into later. But one of the biggest questions I get right now is what are interest rates expected to do? To get a better idea of that, we need to zoom out to the national level and take a look at the 10-year Treasury yield. This is what mortgage lenders use as a benchmark for mortgage rates because it reflects the cost of borrowing money over a long term. So when the 10-year Treasury bill goes up, mortgage interest rates go up, and vice versa. Many experts, including those at Fannie Mae and the Mortgage Bankers Association, are projecting that the 30-year mortgage rates will hover somewhere between 5.75 and 6.25% throughout 2026. That means we're not heading back to the days of 3% COVID interest rates anytime soon. Those rates are an anomaly, not the norm. Some forecasters peg rates lower, some higher, but government loan programs like FHA, VA, and USDA will likely be substantially lower if this trend holds up. Keep in mind, rates are projected to come down, especially as the Fed continues to cut the funds rate and ends its period of quantitative tightening. And this is so important. I don't think financial markets are talking about it enough. Jerome Powell, who is the chairman of the Federal Reserve, term is coming to an end in May of 2026, and Trump has already said he wants somebody more dovish. So I think we might see a bottoming of rates in the early to mid-spring of 2026 as the market prices in a more dovish approach to monetary policy. So yes, rates will likely come down, giving relief to home buyers and homeowners alike. Expect more sales of homes in 2026 than what we saw in 2025. Now let's talk about what's actually happening right here in Charleston, because the numbers tell a very different story than what a lot of folks think. Prices aren't falling. They've continued to rise every single year, just at a calmer, more sustainable pace compared to the crazy pandemic spike. Back in 2020, the median sales price in Charleston was about $299,000. Then we saw the biggest jump in just 2 years. By 2022, prices climbed to $395,000, which represented roughly a 32% increase from 2020. Fast forward to 2024, and the median sales price reached $416,000, which is another 5 to 6% increase from 2022. And with the data that we have so far in 2025, Charleston is sitting at just over $427,000, adding another 2 to 3% on top of last year. So yes, appreciation has cooled off from the double digits gains that we saw in 2020 and 2021, but the trend is still very clearly upward. Some submarkets are flattening a little bit, but overall prices here in Charleston are not going down. Buyers are still moving here, demand is still strong, and the market is continuing to grow. Now let's take a look at what's happening with the inventory here in Charleston, because this is one of the clearest signs that our market is shifting. If you were to go back to the end of 2022, we had 3,153 homes on the market. By the end of 2023, that number ticked up to 3,292, so it was more or less flatline throughout 2023. Then in 2024, inventory climbed up to 3,843 homes, which represents roughly a 17% jump from the year before. But the real movement has happened this year, in 2025. So in January, we started with 3,970 active listings, and inventory has pretty much increased every single month since then. The only exception to this was a tiny dip from May to June. As of October 2025, Charleston is sitting at 5,251 active homes on the market. That's a 36% year-over-year increase, which is a massive shift for a market like ours. This kind of steady month-over-month growth combined with a year-over-year increase of more than 1/3 is a huge evidence that we're finally pulling away from those ultra-low inventory levels that we were stuck in during the pandemic. Right now, we're roughly sitting at 3.5 months of inventory across the Charleston Metro. And for context, anything under 5 to 6 months is still considered a seller's market. So even with listings rising, demand is still outpacing supply in a lot of submarkets across Charleston. So if inventory has been rising throughout 2025 and even peaked in October, then why are we still technically in a seller's market? It really comes down to the fact that while inventory is rising, but not fast enough to rebalance the market. And the biggest reason for this is the lock-in effect. Homeowners who currently have mortgage interest rates between 2.5% to 4% don't want to give those up because moving would mean taking on a loan at pretty much double that rate. That keeps thousands of would-be sellers on the sidelines. So yes, inventory is increasing, but it's doing so from an extremely low starting point, which means that we're still nowhere near that 5 to 6 months of supply needed for a balanced market. The other factor here is new construction. Remember what I said about the tale of two markets? Well, in areas like Somerville and Moncks Corner, builders are adding a steady stream of new homes. And because that inventory is stacking up, they're offering incentives like rate buydowns, closing cost credits, and design upgrades to keep sales moving. That competition helps stabilizes prices in those areas, but it also means resale homes have to be priced right and marketed well to actually stand out. There is definitely more supply in the northern market, which is going to stunt price growth in the short to mid-term. So even with more listings hitting the market, demand is still outpacing supply. That's exactly why Charleston remains a seller's market heading into 2026. Another major piece of this puzzle is that demand in Charleston just keeps growing. And the reason for that is pretty simple. People genuinely love living here. The job market is strong, population growth is steady. In fact, it's one of the fastest growing areas in the entire United States. And we continue to see a huge wave of out-of-state buyers relocating from places like New Jersey, Pennsylvania, New York, Washington, D.C., and Ohio. That steady stream of demand is one of the biggest reasons Charleston's housing market has stayed so resilient. On a statewide level, South Carolina is consistently ranked among the top states in the country for inbound moves. In fact, the most recent data from 2024 pegs South Carolina as the fastest growing state in the entire country in terms of per capita change. And within the state, Charleston is one of the most popular destinations people are choosing. Our local economy is a big part of that. We have major employers like Boeing, Volvo, Bosch, MUSC, Google, and Joint Base Charleston has the Navy and the Air Force presence, all creating stable job opportunities and keeping the economy healthy. A robust transportation sector and medical sector, plus good weather, all make Charleston a great destination to relocate. Right now, unemployment in the Charleston metro sits around 4.2%, which is right in line with the national average. When you combine strong job growth, steady population growth, and ongoing relocation demand, it becomes pretty clear why Charleston hasn't seen the price softening that other markets have been seen across the country. So what's my overall outlook for next year? Honestly, I think 2026 is shaping up to be what I'd call a steady, stabilizing year for the Charleston market. We're continuing to move towards a more balanced environment. I'm personally expecting to see home prices rise anywhere from 2 to 4% over the next year. Now, that doesn't mean every submarket will move the same way, though. Areas like Mount Pleasant, Daniel Island, and James Island will probably see stronger appreciation simply because supply is limited and demand is consistently high. On the other hand, areas with a lot of new construction like Somerville and Moncks Corner and even parts of Goose Creek will stay a bit flatter as builders continue releasing new inventory. We'll also continue to see homes sitting on the market longer if inventory keeps climbing. Properties that used to get scooped up in a week, say in 2023 or 2024, might now take a month or even 2 to sell, especially if they're not priced correctly. And that's completely normal. It just feels different because the last few years were anything but normal. So what does all this actually mean for buyers and sellers heading into 2026? Well, for buyers, that increase in inventory is finally giving you some breathing room. Over the last few years, the biggest challenge in Charleston has been the low supply and fast-moving listings. Homes were getting scooped up almost immediately, and buyers had very little time to make decisions. Today, with more homes coming online and staying active a bit longer, you have more options, more leverage, and more time to actually think through your choices. You'll still face stronger competition in in-demand areas like Mount Pleasant, Daniel Island, and the Peninsula, but the overall market is becoming much more manageable and more balanced. I can personally attest that in West Ashley right now, depending on the type of the home in the neighborhood, we still have bidding wars. And with projections holding, it still makes sense to purchase now because we do anticipate home appreciation continuing into 2026 and beyond. Just refinance when rates come down. For sellers, this shift means pricing and presentation matter more than ever now. You can't just list a home and expect it to sell in a day or two. Buyers have more choices now, and they're being more selective. They're less willing to overlook issues or stretch on price. Homes that are priced correctly and show well will still sell quickly, especially in premium neighborhoods, but sellers need to be strategic and intentional to stand out. This doesn't signal a crash. What we're really seeing in Charleston is a move towards a more healthy, sustainable market pace, similar to what we saw all last decade. And if you're thinking about buying or selling in 2026 and want clear guidance on how to navigate this environment, my team and I would love to be your resource for real estate here in Charleston. All of our contact info is in the description down below. Please don't hesitate to fill out our form and I'll give you a call right away. Thanks for watching, and I'll see you in the next video.